Have you ever wondered how your finances compare to the average person in the US? How much does the average person actually save? What's their income, their debt, and their retirement plan? Some of these statistics might truly surprise you. In fact, some of them are downright shocking. In today's video, we're diving deep into the financial stats of the average person, and I'll break down exactly what this means for you and your financial journey. Trust me, by the end of this video, you'll have a better understanding of where you stand and what you can do to get ahead financially. On this channel, we talk about personal finance and helping people make better money decisions. If that sounds like something you're interested in, make sure to subscribe to the channel and hit that like button. Ever thought about how much the average person makes? According to the US Bureau of Labor Statistics, the median weekly income for a full-time worker is $1,100. That translates to roughly $57,000 a year before taxes. Now, you might be thinking, wait, that sounds like a decent salary, but keep in mind that's before any taxes. When you throw in income tax, healthcare, and other deductions, the take-home pay shrinks quickly. To put this in perspective, $57,000 per year is about $27 per hour for a 40-hour work week. That's the median, so half of the people make more and half make less. What's even more surprising is that around 61% of Americans live paycheck to paycheck, according to a report by Lending Club. This means a large portion of people are just getting by with little to no savings. Think about that. One unexpected car repair or medical bill, and many people would be in serious financial trouble. Moving on to savings, what do you think the average person has stashed away for emergencies or retirement? 56% of Americans say they couldn't cover a $1,000 emergency with their savings. That's more than half of the population, and it's a bit terrifying when you think about it. If we shift the focus to retirement, the numbers don't get much better. According to the Federal Reserve, the median retirement savings for all working-age households in the US is about $65,000. This might sound like a decent sum, but let's think about it this way. Financial experts suggest that you'll need at least $500,000, or somewhat close to $1 million, to retire comfortably. For younger workers, the situation looks even worse. People aged 25 to 34 have a median retirement account balance of just over $14,000. The number goes up to around $88,000 for those aged 65 and older, but that's still far from the amount needed for a secure retirement. With people living longer and healthcare costs rising, $65,000 is not enough. If you're in your 20s, don't panic. Starting early is key. Even small contributions can snowball into something significant over time, thanks to compound interest. So, if you haven't started saving for retirement, today's a good day to begin. Speaking of retirement, many people think Social Security will save them. But here's a reality check. The average Social Security benefit is about $1,836.92 per month, according to the Social Security Administration. That's basically $22,043 per year. For many retirees, this is their primary, or even only, source of income. But let's be honest, can you really live on $22,043 a year? Maybe, but not comfortably. For most people, Social Security alone won't be enough to cover all living expenses, so it's crucial to have additional savings or investments. Here's another fun fact. 25% of people believe Social Security will run out by the time they retire. While it's unlikely to completely disappear, experts agree that benefits may be reduced if changes aren't made. So, while it's important to factor in Social Security as part of your retirement plan, don't count on it as your only source of income. Now, let's talk about spending habits. According to the U.S. Department of Labor Statistics, the average household spends around $72,967 per year. This covers essentials like housing, transportation, and food, as well as entertainment and travel. Let's break that down a bit further. On average, housing takes the biggest chunk, about 34% of total spending. After that, transportation costs come in at around $913 per month, and food may cost about $700 per month. So, if you're feeling like your paycheck doesn't go very far, this might explain why. But what about debt? You'd be shocked to learn that the average American household carries about $9,300 in credit card debt, according to Experian. Credit card debt is one of the most expensive types of debt to have because the interest rates can be sky high. Could be 15%, 20%, or even 25%. Carrying balances like that can make it incredibly hard to get ahead financially. That money could be going towards savings, investing, or paying down other debts. Let's talk about credit scores for a moment. Your credit score can either open or close doors when it comes to borrowing money for things like a home, car, or even starting a business. According to Experian, the average FICO score in the US is around 715. Not bad, right? A higher credit score can save you thousands of dollars over time in interest payments, especially on things like mortgages or auto loans. If you're looking to improve your score, the biggest factors are paying your bills on time and keeping your credit card balances low. Credit utilization, or how much of your available credit you're using, is a major factor, so try to keep that number below 30%. And finally, let's talk about net worth, the true measure of wealth. Net worth is calculated by adding up everything you own, like your house, car, savings, and investments, and subtracting everything you owe, like mortgages, car loans, and credit card debt. The median net worth for American households is around $122,000. For those under 35, it's a much lower $14,000. But as people age, this number increases. Households aged 55 to 64 have a median net worth of $213,000. But here's the catch. A lot of this net worth is tied up in home equity, which isn't as liquid as cash or investments. While a home is an important asset, it's not the same as having easy access to money in retirement. So, how does all of this make you feel about your own finances? Are you doing better than you thought? Or is there room for improvement? The good news is, no matter where you stand, you have the power to change your financial future. Whether that means building up an emergency fund, paying off high-interest debt, or starting a retirement plan, it's all possible with a bit of discipline and planning. If you found this video helpful, make sure to subscribe to the channel and hit the like button. And let me know in the comments, what financial statistic surprised you the most? Thanks for watching.